Piper with the weekend video clip, and it's Saturday the 8th of April. So I'll start with gold this morning. Gold's had an interesting few days. I was talking about the 200-day moving average recently. Well, yesterday gold spiked up, went through it quite convincingly really, but then fell the way back again and is now languishing below it once again. So a false break, which is not a positive, it's actually a negative. How do we count this? I think it's probably a 1, 2, and a 1, 2, 3, 4, and then this fifth wave. So that's quite a positive count actually. So A, B, C maybe. There is trend line support around here. Depends how you count. Well, that's approximately correct. So I think a fall down below to around 12.20 is possibly on the cards here. If it goes below that, I'd revise the count. But right now it's looking a little unsettled. Let's go down to a shorter term chart. This is a 2-hourly chart. The 200-day MA is around here. The 200 times 2-hour MA is around here. There's 5 waves here, in fact. 1, 2, 3, 4, 5. Quite a deep correction, though. At the moment, I'd be negative. Obviously, regain this, that would be something else. But right now, all I can see is a picture that suggests more downside. So 1, 2, 3. Fairly regular A, B, C corrections, as it were. Then this final fifth wave, which could of course be 1 of 5. I mean, it could be that's just a 1, this is a 2. As I said, I'd rather see something positive before I start to suggesting we're going to go up from here. So we've got silver now. Right, silver, again the 200-day moving average is the daily chart. 200-day moving average is shown on the chart. So basically, from this low here, we can count 1, 2, 3, 4, 5. That's a 1 wave. 2, 3, 4, 5. Now the 200-day moving average, quite well documented. There, support here, retested here, bounced and then broke through. This is a rather indistinct. I mean, okay, at the moment it's just resting on it on the close. I wouldn't call either of these bounces meaningful. Okay, obviously we shoot up next week, that would be encouraging. But again, rather like gold, this could be an A, B, C coming in perhaps. Again, obviously that could change. I'll be a buyer if we see something encouraging. I'm already long, obviously, in the various ways I've discussed previously. Looking at the 2-hour chart again from the low here. Silver made a new low there, gold didn't. We've got a 1, 2, 3, 4, 5. Bit difficult to count this a bit here, but so this could easily be an A wave, maybe a B, C. So it looks like we've got a bit more downside to come before the actual thrust up comes in. It's worth looking at the chart of the GDX. Quite a nice 5-wave advance, ABC decline, breakthrough yesterday, which has now been retraced again. So I think it's again an encouraging position overall. I'll see if I can find that actually on Yahoo. Might as well show it to you. Right, GDX. This is the Yahoo chart of GDX. What we can see here is the low in early March, sorry, and a 1, 2, 3, 4, 5. That's pretty clear. ABC decline, very clear. So from that point, we're seeing that wave 3 is beginning. And there was strong resistance around 2350, so this breakup here is quite significant in that context, but of course it's been retraced again. I don't usually use stops on GDX. Obviously that's my own personal decision. I do it for, it's an investment as far as I'm concerned. IG is not the best format, in fact, because you get charged these daily charges and also it's a spread, so it's better to put cash in, but obviously doing it this way you don't put the cash in, that's why you have the charges. But if you want to stop, then I guess around there somewhere. I'd actually wait for this situation to resolve before going in. And this, well, I mean, I never actually make recommendations as such. I just discuss things, and if something is of interest to you, then obviously you may want to do that. But this is an interesting chart, and I say it's clear 5 waves, clear ABC. So set the scene for a strong rally. So right now we've got a setback. Only a break below, well in fact only a break down below 21 will actually negate this particular count. But obviously if we go to around 2250 that would be of some concern. Right, on to FTSE, this is the hourly chart, saw the all-time peak here, 1, 2, 3, 4, 5. This looked like the end of the correction in terms of time and price. The action since has been rather dithery, with clear support around 7260. I got an extreme stop below there, and the low here at 7255. So very strong support around 7255, 7260, as evidenced by various spikes in the market. This is one of three. Then this could be an A, B, C. Clear resistance around 7360, and more importantly around 7390. Could go either way. I mean, the pattern has become rather unclear, but clearly a break below these levels would suggest that wave 3 of 3 has begun and could be quite sharp. So next week could be a dramatic week. Having said that, we're in the final 2 weeks into expiry. The first 2 weeks after expiry tend to be pretty active. The 2 weeks into expiry tend to be less active. Nothing is firm in markets, but that's a sort of generalization. Nevertheless, if we suddenly break those support levels, then that could be quite dramatic. So that's one level to watch out for. On the other hand, a break to the upside, and of course we closed near these highs on Friday, would give us a contrary situation. So that's something to watch out for next week. Alright, the Dow count's changed slightly. A, B, C. That's obviously an ABC incomplete now, but that's also an ABC, suggesting that we should now get a C wave. Again, the key level is, well, we have a key level of 20,500. 2 clear buying spikes there, but we also got a spike here, a couple of spikes here. So between 20,500, 20,700. The pattern suggests we're going to see more downside here. What the market actually does, of course, remains to be seen, but I'll be looking to trade to the short side if we see some further evidence that that's what's happening. Could be a good week for tunnels next week. Tunnels in bear markets are, I think, well, they tend to be far more profitable than they are in bull markets, because markets tend to go for further, which of course suits the tunnel trading scenario. Alright, the DAX, we have here the peak, new all-time peak, A, B, C, A, B, C. So similar to the Dow, really, there's a case that we're going to see the market fall down in a C wave. Nothing's guaranteed, but that would seem to fit this particular pattern quite well, and it's a fairly short-term pattern, and there's nothing confusing there at the moment at this point. Right, a quick word about Bitcoin. As you know, I got involved in cryptocurrencies last November. It's all gone really well since then, I have to say. Mining shares are churning out the Bitcoin and now Ether and Zcash at a fairly satisfactory rate. My sort of holdings are growing. The basic point is that I think this is a bona fide bull market. Bitcoin, I think, outperformed virtually every other asset class last year. It got in a bit late, but even since I got in November, it's gone up. It went almost doubled actually between November and the peak. It's still up 50% or so. So, nothing I see has changed the view that the cryptocurrency phenomenon is gaining acceptance. This is what drives bull markets: acceptance. When everybody likes Bitcoin, everybody's invested in Bitcoin, that's when we're going to see some kind of peak. At the moment, you get people telling you it's all a scam, all this kind of stuff, which is music to my ears, because of course that means it's got a lot higher to go, in my view. Nothing's guaranteed. As an investor, I want to be involved in something that I think has a very rosy future. There will of course be setbacks. I'm not saying it's going to be all the one-way street, but I think that it pays to get involved in this sort of thing. I haven't put a huge amount of money in. It's quite a small percentage. I think it's less than 1% of my worth, and in fact considerably less than 1%. But that's it's up to the individual to decide how much they want to go in this kind of thing. You have to be prepared to lose it. Things don't always work out. But at the moment, everything looks very rosy, and I think these mining shares are an excellent investment. In fact, they're even better than they were to start with, because when I first bought the mining shares on Bitcoin was around £700, $700 per coin, and now it's 50% higher. But the mining shares can churn out the same number of Bitcoin. Basically, you're buying shares in a computer, so computer hardware. And although the price of Bitcoin's gone up, the price of computer hardware hasn't gone up. I'll put a link in the email. Feel free to email me if you'd like more details. Happy to talk about this. It's something that I feel quite, it's a great interest to me, basically. Send me a WhatsApp in the WhatsApp room. Yeah, so happy to talk about it. On that note, I'll call it a day. I found that interesting and useful. Back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.